Hey, what's up, guys? Austin the Money. It's been a while since I've done a portfolio update, so allow me to get started with that. As you can see, I am at $59,000. I did deposit $15,000 into this account recently. I have a home equity line of credit on my house, and it's for $50,000, and I took $15K of that and deposited into Robinhood because some of these valuations are just too cheap to ignore. Risk to reward ratio is crazy. Obviously, we have recovered some. I am up over 17% this week. I have been averaging down in the dip. Start with Google. Started buying it around 185. Now I'm at 300 shares at 178. And if you'll notice, yes, I'm using a ton of margin, but I'm invested in shares. Shares is the safest it's going to get. They don't have an expiration date, and I'm investing in very high quality companies. So that makes it a lot, makes me feel a lot more comfortable about using margin. I'm not going to use margin on Neo or, unprofitable companies like Palantir or Tesla, like meme stocks that just skyrocket up and skyrocket down. Not doing all that volatility. So Google sitting at 300 shares of $51,000. We are down a little over 4% in this position. But Google is trading at a 20 PE and a forward P of 18. Absolutely insanely cheap. I can't wait for Google to get back over 200 and see some insane gains in this portfolio. Next up, we have Amazon. Amazon, I have 210 shares at an average of about $211. We're down a little over 2% in this position. I think I bought my first 100 around 220, and then I bought another 100 around like 197-ish or something like that. Anyways, average is right now 211. Love this position as well. Amazon is trading at a PE ratio of it says 36 on here, and next year it will be trading at like a 26 to 28 PE ratio, a forward PE. So again, cheapest valuation since I believe the year 2000 or 2001. So 24-25 year low on its valuation. Amazon, great company, not going anywhere. I use Amazon all the time, just like I use Google all the time. My top two companies easily right now. Next up, we have SoFi. I have 1,700 shares at an average cost of $12.54. I did start this position a little too early. I started it right around here, around 1620 to 1680, somewhere in this range. I really like SoFi, and I was afraid, the fear of missing out. What is it called? FOMO or something like that. Fear of missing out. FOMO. So I ended up buying some shares, like 400 or so. And then as it came down, I bought like another 100 in the 14s, another 100 in the 13s. And then it came down, it doesn't say it, but it was in the 10s for a while. And I can show you. So I scooped up a lot of shares in the 10s. So right there in the middle of the screen, 200 shares at 1075. 200 shares at 1072, 200 shares at 1065, 100 at 1062, and then 100 at 1183. So basically, I was averaging down the whole way, right? You can see 1292, 1250, 1184, 1230, 11, then another, 700 shares in the 10s. So almost half of my shares came from the 10s, and that really helped bring my $16 average down to the 12s. Now I'm actually up 8% on this position, which is awesome. I still love SoFi for the long term. There's tons of growth to be made at SoFi. This is only, I think, a $14 billion company, $14.85 billion. Lots and lots of growth and room to be made. This is easily a $50+ billion company in the future. Easily in the next 2 to 3 years, $50 billion company. I mean, the growth, it's just an amazing company. I mean, I'm not going to get into it, but it's a great company for me. I love it personally, and that's why I'm invested here. I would definitely like to trim this position down a little bit. maybe if SoFi breaks, 18, 20 bucks, I could trim a couple hundred shares just to lower it a little bit, because I definitely don't want to be in this much margin forever. Next up, NVIDIA. I got 30 shares. I think I picked these up yesterday, actually. 30 shares at 120. These are all long-term plays, by the way. I don't plan on getting rid of Google. I would definitely like to trim 100 shares over $200. If Google hits over $200 a share, and I maybe could trim Amazon 100 as well once Amazon's back really above like 240, 250. That would be my where I want to trim a little bit, would be up there. So NVIDIA, 30 shares. This will probably be a forever position unless I come up with a new strategy. But as of right now, this is just a long-term play. Meta Platforms as well. I picked up one share at probably the bottom. It was pretty crazy. It was around like 579. I think I picked up a share. And then I picked up some more in the 590s. And then I think I picked up one extra today at like 625 or so. But already up 151 bucks on this position, or 5%. I think Meta is pretty undervalued as well, or pretty fairly valued, should I say. I think Meta is probably worth closer to 700 bucks a share. But yeah, great company, great valuation, and great growth ahead. So I'm investing in basically the Mag 7 stocks plus SoFi. AMD, advanced money destroyer, as a lot of people like to say. Only in a very small position of 4 shares at 105. AMD was honestly just getting too cheap to ignore. It broke under 100, and for the growth that's coming up, that's pretty crazy. I think it had a forward PE ratio of like 18 to 20, and I was like, wow, that's like insanely low. Can the growth maintain? Can this AI boom continue? I'm not sure. That's why I'm kind of lower in AMD and in NVIDIA, because I'm just not sure about this AI boom. But Google and Amazon and SoFi, those are definitely my top 3 favorite companies right now and at these evaluations. So also, I'm having a lot of fun with the whole March Madness thing. This is awesome. I love it. I have a P&L of $21.64. My poor Tar Heels got knocked out in the first round, but that's okay because I won $5 on Ole Miss. I figured either I make some money and be upset that my team lost, or lose a few dollars and be happy that my team won. So I basically hedged my feelings. So that was fun. But I think I have some on Florida and Tennessee right now to beat their opponents. Not a lot, just a little bit. I only have 25 contracts of each, just for some fun. I enjoy March Madness a lot. It is my favorite time of the year, so we'll see about that. Over here, let's get into my margin, see what's going on here. So total margin, they've allowed me 101,000. I currently have used $65,800 of margin, which is a lot, right? That is over my account balance. So I am super deep in margin right now. But that's just how bullish I am. Like that is how bullish I am. Is it a little reckless? Sure, maybe. But I'm in shares, right? I'm not in weekly options or monthly options or leaps. I'm in shares. So like I am 100% confident that these shares are going to return to all-time highs. Could it be this? Could it be next month? Maybe. Could it be next year? Maybe. And if it does take a year for these companies to get back to all-time highs, that is fine with me. I don't have an expiration date on these shares. So that's exactly why I'm doing what I'm doing. The valuations are crazy cheap right now, and I'm not letting this lifetime correction pass me by, right? In 2020, we had 4-week bear market, probably one of the shortest bear markets of all time, if not the shortest. And that was an amazing opportunity. Even the correction of 2023, where we dipped down 10% for a very short period of time, things were a lot cheaper then than they are now in this correction, right? So if you're not buying in this correction, could we dip more? Yes. Just, don't go all in. I went all in because personally, I don't care. I mean, I still do have some money, some cash on the sidelines, but it's just not on this account. But a 10% correction is an amazing buying opportunity. Like, let's just say we don't get another 10% correction for 2 years, which is on average when a correction comes, about once every 2 years. If we don't get another one for 2 years, I mean, the NASDAQ could be up 20% by then. So then if it only falls back 10%, that correction will be a great opportunity for its time. But if you looked back 2 years to the present, which is right now, you'd be like, wow, that correction, it was even cheaper. So it's like the longer you wait for the correction, the slightly worse opportunity you get, right? If you invested 10 years ago, you'd be amazing. So, this is really where my investment journey is going to begin, 2025. And I'm super excited for that. My margin maintenance is $35,000, right? So that means basically my account balance would have to go all the way down to $35,000 for a margin call to happen. And why I'm not worried about that is, first off, I could just deposit more money and avoid that margin call completely, or I could just sell some stocks, right? Either sell stocks or add money. And $35,000, that's a long way down. Like, almost have a $25,000 margin of safety, I guess you could call it. $25,000 margin of safety, which is almost a 50% drop. Like 40 to 45% drop would have to happen for a margin call to happen. And personally, I don't see that happening unless Trump does something crazy with these tariffs and we get new news, which is super bearish. Personally, I don't see that happening. Trump literally could just come out and say something and the markets completely change direction and all that. Like he could really move the markets just by tweeting something, or Elon as well. It's crazy. But we're doing really good. For the year to date, we are actually back to green. So at my peak, I was around 5%. We dropped down to 17.5% down year to date, which is about $10,000. I'm sorry. It was, about $10,000. So down 17% just 2 weeks ago. And now I'm back in the green at 2.5%. So never say never. Year to date, 2.5%? I think I'm beating the S&P 500 actually. Yeah, S&P 500 is down almost 2.5%, and I'm up 2.5%. So that's awesome. I don't think I've ever beaten the S&P 500 before. I've only been investing for 2 years. So, and NASDAQ is down about 4%. So right now we are beating the markets. And what I'm doing to hedge these margin payments, I'm selling covered calls. They were out of the money. I think I sold these. Yeah, I sold these on the 7th when, I don't know, SoFi was at probably 11 or 12 bucks, 11.50, something like that. But I'm selling these really out of the money. Like I sold this, yesterday? But yesterday Amazon was, I think I sold on, when Amazon was around 202, I sold 215s for next week. Worst cases, I got to roll them out. Whatever. All these expire next Friday. Not a big deal. Or no, shoot, this Friday. What am I talking about? Today's Tuesday. Yeah, they expire in 3 days. So still decently out the money. I think Google's the only one that's close, $4. But let's get into this is what I want to get into. I like Webull for Webull charts. So the NASDAQ, right? Ever since we topped out at 540, you can see I like to use the 8 and 21 EMA. The EMA's crossed, which is bearish, and we've had trouble breaking above the 8 EMA for almost a month. And you can see here, we did a lot of good consolidation. We struggled for about 5 days to break this EMA, and yesterday we gapped up. We finally broke the 8 EMA, which is a first sign of being bullish. And we also closed. Where am I going? We also closed above the 21 EMA. And today, we sunk down, bounced off the 21 EMA, moved right back up. This is the daily candle. So this is the start of a bullish sign to me, right? Did we bottom? It's possible, but we need to see where our next resistance is, okay? I see the next resistance on the weekly. If you look, the weekly's EMAs have crossed, which is not a good sign. But these candlesticks down here at the bottom are a good sign, right? We bounced at 465 and had a lot of bulls step in. And we didn't close down as far as we could have closed down. And then this last candle today is very bullish. We closed pretty much at all-time, or not all-time highs. We closed at the high of the intraday. So next resistance I see at the 8 EMA and the 21 EMA, which is around 500 to 502. That's where I could see us getting a little sticky right there. If we reject off of it, we just basically hope that we don't go lower than 465, because that right there is our support level. If we go below 465, then that would be a lower high and a lower low. So that right there would be the start of a very big bear trend. If we hit some resistance and we only come down, let's just say we come down to like 480, 485, and then we bounce back up, that's going to be a lower high. I'm sorry, not a lower high, a higher low. So we would basically be coming up right here and then bouncing back up. And if we bounce at around 485 and we bounce over that 500 level that we got stuck at, or that we might get stuck at soon, then that would be the start of a bull trend, in my opinion. And I think the market could go back to all-time highs within the next couple months. So we need to watch out for this 500 level. See how the market reacts. If we break through the 500 level, then I'm switching back to bullish. Easily switching back to bullish. But this is it. That's the weekly. We'll go back to the daily. We are finally seeing some bullish momentum. Bulls are stepping in. We consolidated for almost 2 weeks at the bottoms. And now we're finding some bulls. So this is looking great, guys. Absolutely great. Account is looking fantastic right now. Still, honestly, even with all this bullish momentum, there are still companies like Google right now is still a great valuation, and Amazon is a great valuation. So don't feel like you missed it, right? And don't go all in either, because we're not out of the clear yet. We still need to break some levels. That 500 level for the NASDAQ or QQQ is really, really important. We need to break above 500 before, I would be considered this market to be bullish. But this is basically a well-needed bounce. We fell really, really hard, 10% really, really fast. I think it was the 5th fastest time ever the stock market has fallen. So we really, really needed this bounce. But the bounce is looking nice, I'm not gonna lie. I think right now I'm probably about 30 to 40% bullish on the market for the short term, of course. Year end, I think we'll end up probably in between 5 and 7% for the year. For the NASDAQ, I can see about a 5 to 7% return. Nothing, definitely below average, nothing impressive. But considering that we're down 4%, that would be like another 9 to 10% upside from where we are currently. And that's just on the NASDAQ. If you do individual stocks, you could see a better return, right? Because there are companies out there that are trading 20% down. So there's definitely good opportunity out there, guys. I wouldn't stay all cash. Definitely get your fingers wet, get your toes wet, and do what you think is comfortable, right? If just follow your gut. If your gut's telling you to stay cash, then stay cash. But 10% down in a very strong market, that's great buying opportunities, especially if you can find those individual stocks. Mine are obviously Google and Amazon. Those are my top 2. But appreciate you guys sticking with me. I'm going to try to do some more charts. And if you stuck with me this long to the end of the video, can you please tell me if you would like me to keep doing phone recordings, or would you like more like laptop and like more news updates, stuff like that? Because I I really want to do more than just portfolio updates. I want to get more into the news for you guys that, are working a lot and you guys don't have the time to look up stuff. I want to be of as much help and as much value as I can to you guys. I want you guys to actually get something out of my channel. Whether or not you think I'm a, crazy investor or whatever, I can still provide good news and good updates and good stuff like that. But yeah, I think my next video, I'll show you guys how I value stocks and how I deem them as cheap or great valuations and all that. That'll be my next video. But yeah, let me guys give me some feedback, and I'm curious what you guys think. But I hope you guys have an awesome week. I'm about to go do legs. So enjoy your week. Peace.